The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Let's check out where the markets are at right now. We got the S&Ps up 5 points. We have the Russell down 0.7. We have the Nasdaq down 0.5. So pretty just quiet out there. But the Dow is keeping things alive. It's up 74 points on the day right now. We got copper is currently up, let's see here, about 2%. So massive move. Don't forget, you can trade copper on Nadex, one of the often forgotten products out there. Looking at gold, it is up right now to just a point. We got silver, so really nothing going on, gold or silver right there. Looking over at natural gas, it's up over 3%. A lot of volatility. Premium is built in, but still a great product to trade, as long as you have defined risk. Looking on over at oil, we got oil right now is currently up just a few cents, so up about 10 cents on the day right now. We have corn is currently down about $4. We got soybeans is up about 15. Euro dollar is currently, looking at it, down 30 pips. We got the Aussie dollar up 32. We have the pound dollar up 26, and we have the dollar franc up 36. Dollar CAD currently down 28 with dollar yen up 4. Aussie yen up 39 pips on the day. Euro yen is currently down 29 pips on the day. Pound yen is up 32, and the euro pound is down 44. Just a heads up, Nadex is going to be launching this Friday. They're going to be rolling out, not this Friday, this Sunday. Maybe it's this coming Sunday. Let me get the right date for you. Maybe this coming Sunday. I'll let you know here in just a second. But they're about to roll out the nighttime euro-yen binaries, meaning that they'll have, like, every hour, they'll have those expirations that you can trade. And I'm going to pull it up and look at it. I got all the information. Overnight, Euro-Yen binaries launch. Okay, April 7th. Yeah, so it's the following Sunday. I'm just getting a little bit ready to go here on this. But on April 7th, they'll be launching those out. So that's just one more product, one more contract, one more chart you can be looking at with having expirations every hour. And I love going in just grabbing premium, whether it be butterflies or whether it be some directional trades. On the premium collection. That's usually my favorite way to trade at night. So, along with, of course, the news. And, we go through all the news, stats and details for you right here on the Diagnostic Trading Hour to make sure we get you set up for that. And yesterday I talked about, hey, get that demo account, get it going, and sort of walk through that a little bit, and to make sure that, you knew what to do so you could start and get things going. And let's see, what do we got this week? Let's go over just today. We had a few things that we can look at, and so I want to walk you through that, sort of a step-by-step walkthrough on it, okay? And make sure you have what you need to be able to trade the upcoming week. And let's see here. Last night, if you took advantage of it, okay? So we didn't really get to cover it yesterday on the trading hour, just things sort of flew on by. But if you did take advantage of it, then you were able to grab some of that money on the UK CPI. We'll look at that here in a second. We'll talk about how that one worked out, or potentially, trade that. And let me go ahead and just pull up the chart. We'll get this one going and look at it. And on that, you can sort of see, we had a nice big move right there, but also just going back to just the sort of the launch right there. About a 40, about a 30 to 40 pip move. Let's see here that we got total high to low, 65.12, 64, 80 or so is about the low here. It's about a 30 pip move on that trade. And just to back out and look at it overall, one of the things I've talked about a lot, that I've been doing a lot of, is going in and looking at like the iron condors. And a lot of times, a lot of these trades are a lot better off being iron condors than doing them as straddles or strangles. You're just able to go in. You're able to get a lot of premium. You target that like 7 a.m., 6 a.m. Central expiration time, and they can work out just really, really well. And I mean, you're talking like bringing in like say $50, $60, $70 on the trades. And the numbers on this report are sort of interesting because you can go in, you can look at them, and we usually get that 30-50 pip move easy. And the average high to low is pretty high. It's it's about 70 pips on the trade. But the high to low is not the whole picture. Okay, you need more than simply the high to low. So you want to be able to look at that, and you want to know not only what is the high to low, but really how far up do I expect it to move, how far down do I expect it to move from the release, and where do I expect it to close. Okay, so there's really several data points there. And then what about at each expiration? Okay, so not just, like I said, not just the high to the low, but at each expiration along the way, what should I, potentially realistically expect? And one thing I've noticed again on this report right here is we have not just had massive moves over the last 12 months. Some of these reports had a lot of stuff going on, but now we're seeing that things are calming down, and I mean over 12 months, not just in the last few weeks. And so we're talking like 30, 40 pips, 50 pips. There's been maybe like a few 70-pip moves in one direction, but most of the time, I mean, you're getting that whole 70 high to low. And so I guess the way I want to explain this is if we were looking, let me bring up a different chart I can draw on a little bit easier. And just so I can really get this across. But let's say I'm looking like right here at the dollar, CAD, okay? So, and just to get all this stuff out of the way real quick. And I'll have my, expected moves high to low for the day and everything else. And if you just look at this and you go, okay, this is high to low. Okay, and that was like 20 pips. But it went from the open over here, it went up, 8, and it went down 12. Okay, 12, 13, just depending upon exactly how precise I am on pinpointing everything. So the high to low was 20, but really, and then what was the open to close? Okay, so over here and I go, what's my open to close? And that was like 5. So I was like, well, wow, when I go, high to low, and then I look at, open to high, open to low, and then I look at open to close, I start looking at those 4 different numbers. Those are the things you'll see me looking at a lot. Then you'll start realizing, this is a little bit different than I thought. And I even, I have a thing that I'm working on that we got that I can go in and add this on, and I can look at close to close like on the hour. Okay? And so I'll put this up real quick and just to show you. There we go. And so by adding that on the hour, this is like the big key for doing things like butterflies or condors. It's this close to close piece. Okay? So we're going to add that on. And now I actually have, sort of like I said, just a little bit different measurement. But I can go over here, drag this up a little bit, and I want to shrink everything down I can so we can really just focus on this piece now. And this sort of lets me see what's the trending versus the volatility of the bar. And for example, I can go over here and it says, hey, my expected movement is, 9 pips. And I can check out the expected versus the actual on each one of these. And let me go in and do one more setting real quick. I want to update this to make it say, close on that one. We'll do high to low on this one. All right, there we go. And we'll put a 60-minute high to low. There we go. Okay, so basically just getting these, varying numbers, and I mean, it's something I'm playing with. We just started really working with on the close to close, but it allows me to see, like, was that close greater than the expected close? Or, what was it? So, for example, right here, my expected close was 10 pips. My actual was 11. Right here, my expected close, or expected high to low was 20. My actual was 18. Okay? What that tells me is I should probably expect it to, go up a little bit and then down a little bit, right? So I expected to close about 10 pips off, and that's exactly what it did. That would let me maybe fine-tune a binary contract. It also would let me know that if the thing goes up 10 pips, I could have a really, really good expectation. And this is something I really haven't focused on teaching yet, so I'm always adding in the layers. But if I have an expectation of a close to close of 10 and a high to low of 20, I really may have a lot of confidence at the 10 pip mark, of starting to look for a reversal even earlier than normal. Over here, close to close of 7. Actually, it was 2. Versus having a expectation of, again, 20 pips when we had 11. But again, close to close was 7. So that tells me, hey, that's a butterfly hour. That's an iron condor hour. Whenever I see that close to close right there. And I can go down. When the close to close starts getting really big, that's when I get a little more cautious. But, check this out. This is an hour that's sort of interesting. On this hour right here, we have an expected close of 5 pips off from the open of the hour. But we have an expected move of 20. Okay, expected close of 5 pips, but expected move of 20. That tells me this is usually a very volatile hour, but pretty much by the end closes back where it starts, meaning usually goes up, maybe 20 and then back down 15, or up 10, down 20, back up 5. But it lets me see, what is that volatility of that hour really, what should I expect? And by knowing that low expectation on the close of that hour, look at how big this hour was. This is what we're focusing on right here. Okay? So if it fell on down, I have an expectancy that this thing, it's already at 21 pips. Okay? I went up to 24 pips from high to low. Well, I expect the open to close to be, basically 5 pips off. It was 7. 9 pips off. It was 7. Okay? So if I'm already up at 24 and I'm expecting it to actually revert back 14, that can let me know not only that I could potentially take a long trade that I'm at the expected move, but it also tells me, okay, how much of a profit could I expect to take out of this trade? So what should I even realistically go for? If I've moved down 24 pips and my expected close to close is 9, then I basically should at most really add 9 pips to that actual, and or 9 pips, subtract 9 pips from it. I'll go through the math on it when we get back, but it's a pretty cool, simple method to know where to shoot on a take profit if you're maybe you're a scalp, futures, or forex trader. All right, we'll be back right after this on the Diagnostic Trading Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoades, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And so just sort of going into the concept of looking at the height of the low, understanding that, like, what's our expectation of movement. You know, that's what diagnostic trading is about. It's about looking at the fundamentals, the news announcements coming out, looking at the statistics, like how far the market's expected to move based on deviations and everything else, and looking at the seasonality, the time of day of that, and then also going into the technicals, just reading the charts. And by looking at this close to close, the market moves down. And what I was going to say at the end of the last session there was if it moves down 24 pips, and my expected close to close is about somewhere around 9, then here's the idea, is take the close of the last bar. Okay? So we're going to go up here. And we'll make the bars a little bit thicker and make it a little easier to find. And we'll throw a little calculator up here. Okay. And on this right here, I'll just look at it and I'll go, okay, what was the close? The close is 1.186. So 1.186 there. Now, of course, 9 pips could be 9 pips above the last close or 9 pips below the last close. So which one do you go for? Okay, well, if you've already moved down the expected move, your probability isn't, in at least expecting it to move, like past that expected move all the way back up again. So in this case, if it went down, I'd be looking for, 9 pips below the close. So what is, if I go and I take that price, 1.1860 minus, 9 pips, that's basically saying this is about where, I had messed that up, didn't I? 1.1860 minus 0.009. If I can get that working right. Basically saying probably expecting somewhere around 1.851. And just to do the math with you one more time, 1.186. There we go. That's what we need. Okay, 1.186 and 1.1186. I was like, something is off. There we go. 1.1186 minus 0.0009. Then I basically saying I expect the market to close at the end of this hour at 1177. Okay? Now, I'm not making that expectation until it pulls down. So it pulls down. I've met the expected movement from high to low. I think it's going to go back. Okay? Where do I think it'll go back to by the end of the hour? I think it'll go back to 1.1177. Well, how close are we? How close at 1.1179? Not too bad. Okay? So within 2 ticks, right on. So very, very close, which is awesome. So if I go over here, and once I hit my expected move, I'm down here at the bottom of the channel, I'm at the expected move, however you want to play that. And let's just say we buy at the bottom of the expected move, which is, we know it up front, so it's not like it's hard to pick, which is basically 22 ticks below the high. Okay, so we got a high of 1192. Then that high is 1.1192. And again, if I mark that and say, okay, we're going for 22 pips, like right at 22, let's just say I hopped in. Now, I'm not saying this is exactly how you should do it. I'm just trying to walk you through it. But plus 0.022, I look at volume as a filter before I do anything. But minus 0.022. Okay. And so what it is, we'll take that high right there, 1192. So 1.1192, and then we're going to take the expected move of 22, so minus 0.022. So basically right at 1.1170, we could be looking to go long on the trade. You're basically going for about 7 pips on this. That sounds nuts, okay, but sometimes it's a lot more, sometimes it's less, etc. But what this does, it goes, hey, okay, well, if I want to do it in the money, I want a strike that's below 1177. Or an out of the money, I don't want one higher than 1177. Or maybe I'm doing just spot forks, and I'm just going to grab 7 ticks in, out, done. With like a 3-tick stop loss. 7 ticks can add up on the right amount of size. All right, stay right there. We'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And so right now, again, going into, how to have your expectations. Like if you're a scalp trader, this is, if you have expectations on movement, it hits that movement. Now you use expectations on close, and how far you expect it to go back. And so you can be very, very, razor sharp sniper precision in going in and getting your trades on by not having it be just, I don't know if you noticed, but there's really not any indicators on my chart. Okay, there's measurements of volume. And when I say measurements, I mean like what's the expected volume and what is the volume. There's measurements of price, high to low. There's measurements of close to close. And there's the channel, just sort of basically that indicator really just show me the high to low from open. Okay? It's just the same thing, just in a visual, format. I do like indicators, a couple of them. Okay? But not your standard ones. They're just usually too slow for the way that I like to trade personally. But more I like stuff that gives me objective non-lagging forward information. So expectations, deviation levels, implied volatility based, that's forward. Volume is live, implied volatility is live and forward looking. So using things like that lets me, try to be one step ahead versus the indicator, being a step behind. And any indicator I put on a chart, I'm still going to look at my expectations. I'm still going to look at my volume. I'm still going to look at my deviation levels to follow it. Because it may be easy. I mean, we've all been stuck in that trap of the indicator always seems to give the signal just at the wrong time, So, you need something that's sort of on top of that won't just get you hit every time that it comes up. Meaning, I need something to tell me, like, okay, I know the thing just gave me along, but it's a little too slow at this point. It's not really going to help me out that much. So there's a lot of different ways to look at these things. I'm just trying to give you a couple of the ways that I like to look at them, and it really helps quite a bit, amazingly quite a bit. Right here on the dollar CAD, I mean, just current hour, expectations. So high to low, we've hit 11 out of 15, about 75%. That's usually when I look to start going long, unless something tells me otherwise. Market starts moving on back up. We have about an expectation of finishing off 9 pips from the high or the low. So we're going to expect a little volatility on this one, okay? Right now we're only 2 pips off of the close, and I expect it to be pretty close to the expectation. So therefore, I think it's probably going to drop down about 7 more pips or move up about 7 more pips by the end. And that just lets me know, hey, be careful, be leery, pick my strikes wisely based on that knowledge. So the more I can be aware of these expectations, the more expectations I have that are objective in the market, the better I can be as a trader. And I mean, there's a lot of markets we look at. What I'm just closed down on. Nadex still open, of course, over on the CME. Check out gold. And there's a lot of markets we can look at, like I said. But we'll throw up gold, and we'll also go in and look at the other news reports before we wrap up for the week here. And I'm gonna have to do a little restart. Love it when that happens. I made it to me because the roll. Give me 1 second on that, and I'll update it, and we'll get it going. Let's see here. I got a couple new ways I'm looking at putting this in, but what we have is, the 6. That's why I was like, wait a minute, there shouldn't be any information on gold right now. So I'll just pull up gold over here. We'll look at that. And just the move we've had on it. So all morning movement. And when you're looking at this chart, it can get really confusing as a trader, because you're trying to figure out, okay, it ran down, awesome, then it bounced up, but then it had like a big spike, like there's all that final, like that last little move and take profit, and then it ran back down. Now it's back up, and I mean, it's so I mean, just like that kind of movement right there can really mess with your head. And so just having expectations lets you know, hey, there's more room to go. How can I take advantage of it all the way till the current day? And then when should I expect it to be flat? When should I expect it to move? And some of this you can just see by looking. If you'll go back and look at certain times of the day. Look at this. Flat, boom. Okay? Into the end of the day. Flat. And you'll notice the simple patterns that exist. I just try to make them really, really easy for me to see. And to know when I'm outside of that pattern. Because if I'm outside that pattern and my trading plan is based on that consistent pattern, then I'm sort of setting myself up for failure on the trade, right? Because how am I going to be, if I'm trading thinking the market's going to be flat, then also the market starts, going like super fast or starts moving in the wrong direction in a way that it shouldn't normally. It's nice to know that that's not normal versus what is normal. And if you can know that, then you just have a lot more confidence in your trading. You have expectations. Everything's laid out. Now, as far as expectations, we got some news coming on up. Let's talk about that, and I'll get it all up and running for us over here. But You can pull up websites. There's a lot of websites out there, like Forex Factory, investing.com. There's a bunch of them. But, we even had some new home sales that came in. We had ECB President Draghi came out and did a little speech today. Always something to be aware of when that's happening. May have a big impact, may have no impact at all. But it's just something, tonight, the Aussie dollar, the deputy governor is going to be doing a little speech. And you can hop on here and you can sort of see, is this a real speech? Like, is this like a nationwide speech? Is this just a little bit, a small one? Either way, when people, when these guys talk, sometimes they can say something off the wall that just randomly throws things for a loop. So just being aware that it's there and having your, if you are trading, that's one of those things you may not just avoid trading because that person's talking, unless it's like a major, monetary policy speech. But being aware that it's happening, so that way you don't just get caught off guard. We got an FOMC member speaking tonight, so that can affect anything dollar-based, okay? RBA Financial Stability Review, there's a report coming out at 8:30. What kind of impact does that have? And I'll look and see if there is any kind of consistent impact. Just checking. Not really any kind of consistent impact. It looks like that we need to be worried about, okay? But, I didn't even give a rating. It's just a report. That's probably the biggest reason. I'm looking, I'm like, there's nothing on this. So it's just like an assessment of the financial condition, potential risk. There's just not enough on there. But the evidence on strain and imbalances can provide insight into the future of monetary policy. So there's really, I don't have any stats on it. It only comes out 2 times a year. That would make it even harder to have stats on because, you're talking about there's only been, since 2003, so 10 years, there's been 20 reports basically ever come out. So you can't even get like 2 years or 5. Basically you can almost have 2 years worth of stats. Let's say if you had monthly reports, right? And then, yeah. But I'd be aware of that one. So I honestly have not just went in and checked it all out. And to get that kind of intraday data going that far back be a big pain. But I'd be very aware of that report because I honestly don't know anything about it. I have no stats on it. Okay? Let's see here. Yeah, Draghi's he's ready to take action if needed. So there's little tips like that. But be careful. Don't get too caught up in the news. I would use a website called Financial Juice. It just feeds stuff through, just so if I'm like, what's going on? Like, there's something weird that happens. It's a quick, easy way for me to see it. But the only news that I trade are like scheduled news announcements, not every little thing that pops out. And let's see, going on over here, moving down to sort of seeing, what do we got that we might look at for tomorrow? We got durable good orders coming out. And that is going to be released at 8:30. The average move, just looking over, trying to see maybe a couple of these different pairs we might be able to look at. But euro dollar, and comparing it to a couple of the others. Euro Aussie, a lot of these about the same. Pardon me. And what I'm seeing is that we got basically 8 to 11. Okay, like the last report, about 30 pips. Report before that, ran up about 35, came back down about 20. Report before that, we had about 13. Before that, 20. Before that, this is all euro dollar stats. Ran up about 25, came back down about 15. Before that, we went down and up 10. One before that, we went up 25. One before that, it's just so fast, 25. One before that, biggest move we had, 50 pips down. And it actually ran down 30 and then up 10 and then on back down. Before that, basically like up 10, down 20, up 10. Pretty much flat. 1 pip on the one end before that. And then go one more. Released, closed like 9 pips. So, you're talking about maybe 9 to 30 pip move on corridor, what goes between 8 and 11 on euro dollar. There's an iron condor. That's that close-to-close stuff I'm talking about, okay? Even the high to low. So you could look at iron condor. You could even bump the thing sooner. The benefit of the hours, you get more time. The drawdown under the iron condors on those is that you actually, how do I put this? You pay for it because you don't get as much time. If you don't have as much time, you don't get as much premium. But when you get more premium and more time, you also have a wider spread, so there's a little more risk potentially in the trade. part of that should be offset by getting more profit. And just combine the profits from both sides. Check out some of my previous recordings. Here are the archives of the Diagnostic Trading Hour where I go into the iron condors. But, if the average move, it looks like we're looking at somewhere between 10 and maybe 25, 30 pips. If you can bring in at least $25, you're looking at breaking even, okay, meaning on the combined side. If you can bring in $35, $45, $50, now you're looking at some nice profit. Now, one of the other pairs that I really like to look at usually is pound dollar or pound yen, if I can get away with it. But and the reason I say that is because a lot of times the pound is more volatile in nature, will have a little better payoff than other currencies. And the pound yen has narrower spreads than the pound dollar. It's like the average move, it literally fluctuates between like 10 and 50 over and over again. I mean, it's almost like a 50-50. Like 10 pips, 50 pips, 10 pips, 50 pips between like 8 and 11. So you could hop in on that, and if you can get about $50 on the trade, you're most likely going to at least break even, if not make $25 on the pound yen. If you get $50, that'd be a 1-to-1 risk-reward, max risk-reward ratio. It's trying to give you any possibilities. Pound dollar, not quite as volatile, looking at about 20, 30, 5, 25, 20, 25, 40 pips, 20, 50 pips, 50 pips, 20, 10. So basically about 3 reports out of that, we had about 40 or 50 pips. Out of the last 12 months, we had about 10 to 20 pip movements on pound dollar. So again, if you get $50 on that, that could be really good. So pound dollar, pound yen, even euro dollar, all those looking really good for just the core durable good order reports. The reports that did move a lot, what was the difference? Okay, this is really this is a good thing to know. What made them stand out from other trades? And let me see if I can tell you. Okay, I'm looking through all the reports, all the actuals. What I'll do is I'll go through and I'll actually check out all the actuals, all the forecast, the revision of the forecast, all that information. And go, was there something that's significant that really, reared its head? Okay, well, I can tell you on one of the reports from August of last year, everything was negative. It was highly negative. It was over 1% negative. So negative like 1.2%. And this really even wasn't a big thing. It went up like 40, but it came back down to 10. But deviate, the number was negative, and the revision was negative. And not only the core order, but the durable good orders, those numbers were negative, with the revision being negative as well. So all 4 numbers, the actuals and the revisions, were negative. Most of the time, you're seeing like some positive, some negative. Let's see here. The one time, let's see, we have very high, like all 4 being positive. We saw about a 54 pip down move on just about both of them. So it's simple things like that. What I can tell you is that let's see here. So the number should theoretically be good for the dollar if the number is better than expected, and therefore you would think the pound dollar would go down, but that's not actually what happens, because that'd be the dollar getting stronger. But I mean, I'm even seeing times when they're all 4 negative and nothing happens. So really, you just got to play the probabilities and stats that on average it moves, say 20, 25 pips, and maybe like 3 out of 12 times it's going to move about 50. If you can bring in $50, you're going to break even when that happens. And of course, there'll be the anomaly where you'll lose, but if you can have 9 out of 12 where you're making money, that's awesome. So that's why I like playing the probabilities in every way I can. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhoades, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhoades Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And so, we're going through, getting ready, and just laying out like horrible, durable, good orders. We talked about several different ways to do iron condors on that. I want to make sure that we have, anything else that might be a potential trade set up for you for tomorrow, knocked out and ready to go. The really only other thing I see is tomorrow night. Might have a trade balance report with Aussie dollar, but the problem is when it comes, actually it's New Zealand dollar, never mind. I was going to say when it comes out, the market's not going to be tradable yet. We could do a crossover, but really no great way to benefit from that one. That really is the main news coming up for tomorrow. Other reports that we're going to go over this week. So make sure you tune in. We're going to be going over the British retail sales report for Thursday. We're going to go over the U.S. GDP, big report, okay, coming out on Thursday as well. We're talking about pending home sales, maybe some ways to trade that. And then for Friday, we got the British GDP and, personal account balance, all that, but GDP being the big one. We'll be talking about that for Friday. So those are going to be our main news reports we're looking at on the week. Things, like I said, to be aware of. We got bank stress tests and more results coming out, but none of that should be a surprise. But they could have a little impact on the market tomorrow at 4:30. Shouldn't really impact anybody, but we might see something afterwards if there is a surprise. Like I said, we already got the pound retail sales. That's coming up. We got pending home sales. And a lot of yen reports coming out Thursday night. Nothing that is anything worth writing home about, but retail sales might be the closest one year over year. But, with all that, just be aware if you're trading the yen between 7 and 8, the potential impact right there. And then on Friday, we're going to have the preliminary CPI, stuff like that. Most of this, not a big thing. It's just good to be aware of when those reports are coming out and, note them. Grab them, copy them, note them, and go, hey, when this report came out, the expected range was this, and this is how far it moved. Did this seem to have a consistent impact over time? You're going to figure that out really quick. What impact does the expected range, does a move have on whether or not the expected range is hit? And, do we, more often than not, do I see it break it or just stay right there? And so it lets you know which ones to use for straddling, which ones to use for doing iron condors on, and which one to, maybe just sort of get out of the way, like it's just erratic. And it's just piece by piece, putting it all together. And that's how you gain that market experience. Tell you where the market's at right now. We got the S&P up 9 points, the Russell up 1.5, the Nasdaq up 9.75, Dow is up 111. Copper is currently up over here. We got it up 2% still. Gold is up about 80 cents. We got silver is down almost 0.5% now, so it's starting to move. We got natural gas up 3%, still going. We got oil is making a little bit of a move, but not much. We got corn down $4 on the day. It's closing on down. We got soybeans up a couple bucks on the day. Pretty flat there. Euro dollar right now down, starting to move down in negative territory, but just down 7 pips. We got the pound dollar up 30, or Aussie dollar up 35. Pound dollar's up 54 on the day. And looking over at dollar franc, of course, pound dollar had that news helping drive it today. Just wrap it up. Like I said, we got the dollar franc right now. It's up 8 pips. Dollar CAD's down 26. Dollar yen is flat. It's unch on the day. And looking on over at Aussie yen up 41. Euro yen flat on the day. Pound yen up 50 pips. And Euro pound is currently up 27 pips on the day. So I hope y'all picked up a couple tips and tricks on how to look at expectations on high to low, expectations on close to close. You bring those numbers together, they're going to help you really pinpoint your entries, your take profits, your targets for the shorter term trades. And y'all have a great day. And we'll see you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.